Hey everyone. One of the biggest misconceptions about money is that it's safe and sound sitting in our bank accounts. But here's the hard truth. While that money might look like it's growing, inflation is silently eating away at its value every single day. That's why in this video, I'm diving deep into 6 assets that can not only protect your hard-earned money from inflation, but potentially grow it exponentially. Let's explore these assets and set you up for a more secure future. Please hit subscribe. It is free to you, but it helps the channel grow. Let's kick things off with what I like to call God's money: gold, silver, platinum. These precious metals have been a store of value for centuries. They have been cherished and sought after by civilizations throughout history. From the ancient Egyptians who adorned their pharaohs with gold, to the Romans who minted silver coins, these metals have always been symbols of wealth and power. Even in modern times, they continue to hold a special place in our financial systems and personal investments. Unlike the dollars in your wallet, which governments can print endlessly, precious metals are finite. This scarcity is what gives them their enduring value. When you hold a gold coin or a silver bar, you're holding a piece of history, a tangible asset that has stood the test of time. It's a comforting thought, especially in an era where digital currencies and electronic transactions dominate. Take gold, for example. Back in the 1950s, you could snag an ounce for around $400. It was a significant investment even then. People would save up for months just to buy a small piece of this precious metal. It was seen as a safe haven, a way to protect one's wealth from the uncertainties of the world. Today, that same ounce is over $2,000. This dramatic increase highlights gold's ability to preserve and grow wealth over time. It's not just about the numbers, though. It's about the security and peace of mind that comes with knowing you have a reliable store of value. In times of economic turmoil, gold often shines the brightest. Some analysts predict gold could hit $10,000 an ounce by 2032. Imagine the potential returns on such an investment. It's not just speculation. It's based on historical trends and current economic indicators. As more people seek safe investments, the demand for gold is likely to increase, driving up its price even further. That's a potential 5-fold increase in just a decade. It's an exciting prospect for investors. But remember, investing in gold isn't just about the potential for high returns. It's also about diversification. By adding gold to your portfolio, you can reduce risk and increase stability. You don't need Fort Knox to invest in precious metals. Even small investments can grow significantly over time. Whether you're buying a single gold coin or a small silver bar, every bit counts. It's about building a foundation for your financial future, one piece at a time. Gold ETFs, or exchange-traded funds, track the price of gold, so you can ride the wave of its appreciation without storing physical bullion. It's a convenient option for modern investors. Plus, it offers liquidity, meaning you can buy and sell shares easily, just like stocks. This flexibility makes it an attractive choice for those who want to invest in gold without the hassle of storage and security. And hey, don't sleep on silver and platinum either. These metals have their own unique advantages. Silver, for instance, is more affordable than gold, making it accessible to a wider range of investors. It's also used in various industries, from electronics to solar panels, which adds to its demand. They offer similar benefits, with the added bonus of industrial applications, which further boost their value. Their demand in technology and manufacturing sectors is ever growing. Platinum, on the other hand, is rarer than both gold and silver. It's used in automotive catalytic converters, jewelry, and even in medical devices. This diverse range of applications ensures that platinum remains valuable and in demand. It's like having your cake and eating it too, but with gold. Investing in precious metals can be both rewarding and enjoyable. Whether you're looking to diversify your portfolio, hedge against inflation, or simply own a piece of history, precious metals offer a unique and valuable opportunity. So why not start your journey today and discover the timeless allure of gold, silver, and platinum? Now, let's shift gears from the glitz of gold to the grit of industrial commodities. We're talking cobalt, nickel, copper, the unsung heroes powering our modern world. These metals are essential in everything from electric car batteries to smartphones to renewable energy infrastructure. As demand for these technologies explodes, so does the demand for these commodities. Take cobalt, for instance. Since 2020, its price has skyrocketed, largely fueled by its use in EV batteries. You can invest in mining companies like Rio Tinto or mining-focused mutual funds to get exposure to these valuable resources. For the more adventurous investors, there's always the world of derivatives, futures, and options, which allow you to speculate on commodity prices without owning the physical goods. Look, let's be real. We live in a world where no currency is backed by gold anymore. The days of the gold standard are long gone, and now our financial systems rely heavily on trust and perceived stability. This shift has fundamentally changed how we perceive and manage wealth. No longer can we rely on the intrinsic value of precious metals to safeguard our assets. Instead, we must navigate a complex web of financial instruments and economic indicators to ensure our financial security. It's all about trust and stability, which can be pretty fragile these days. Economic uncertainties and geopolitical tensions can shake that trust in an instant. The interconnectedness of global markets means that a crisis in one part of the world can have ripple effects everywhere. This fragility is why investors are constantly on the lookout for safe havens, places where their money can weather the storm. That's why when the going gets tough, the smart money heads for the Swiss franc. It's seen as a fortress of financial security. The Swiss franc has a long-standing reputation for stability, backed by Switzerland's robust economy and prudent fiscal policies. This currency is not just a piece of paper. It's a symbol of reliability in an unpredictable world. Switzerland's rock-solid economic system and its reputation for neutrality make it a magnet for investors seeking safety during times of global uncertainty. Its political stability and strong banking system are key factors. The country's commitment to neutrality means it is less likely to be embroiled in international conflicts, further enhancing its appeal as a safe haven. The Swiss National Bank's conservative approach to monetary policy also plays a crucial role in maintaining the franc's strength. Remember the 2008 financial crisis? The Swiss franc became the go-to safe haven. Investors flocked to it, seeking refuge from the storm. During that turbulent period, the franc's value surged as people sought to protect their assets from the volatility that rocked global markets. This historical precedent underscores the franc's enduring appeal in times of crisis. In early 2023, one Swiss franc was worth more than a US dollar, proving its resilience. This strength is a testament to its enduring appeal. The franc's performance is not just a fluke. It reflects the underlying strength of Switzerland's economy and its prudent financial management. For investors, this means peace of mind, knowing that their wealth is shielded from the uncertainties that plague other currencies. Currency ETFs and forex brokers make it incredibly simple to diversify your portfolio with safe haven currencies. These tools are accessible to everyone, not just the wealthy. With the advent of technology, even novice investors can easily access these financial instruments. Online platforms provide real-time data and analytics, empowering individuals to make informed decisions about their investments. Even if you're starting with just $100, you can get in on the action. It's never been easier to protect your wealth and invest in stability. The barriers to entry have never been lower, and the tools at your disposal have never been more powerful. Whether you're a seasoned investor or just starting out, the opportunities to safeguard your financial future are within reach. So take that first step and explore the world of safe haven currencies. Your future self will thank you. Okay, so we've talked about precious metals, industrial commodities, and safe haven currencies. Now, let's talk about good old-fashioned government debt. While our fiat currencies might not be backed by gold anymore, they are backed by the full faith and credit of the issuing government. In the US, we have treasury bills, treasury notes, and treasury bonds. These are essentially loans you make to the government, and in return, the government pays you interest. These government securities often offer better returns than your typical bank savings account, all while being backed by the full might of the US government. You can buy these directly from the government through Treasury Direct or on the secondary market. Always do your due diligence and look at the country's economic track record and political stability. All right, let's switch gears and talk about the stock market. While government securities offer safety, stocks have the potential for much higher returns. Value stocks are like the reliable workhorses of the market. They're typically established companies and industries with steady demand. Think companies like Nucor in the steel industry. They're not going anywhere anytime soon. These companies often provide stable price appreciation and consistent dividends. If you don't have the time or expertise to research individual stocks, mutual funds can help. Specifically, dividend-focused mutual funds, like the Vanguard High Dividend Yield Index Fund Admiral Shares. Pool money from investors and invest in a diversified portfolio of value stocks. It's like having a team of expert stock pickers working for you, but without the hefty fees. Let's talk about something everyone understands: land. They're not making any more of it, right? Land has always been one of the most valuable resources on the planet. It's finite, always in demand, and a non-depreciable asset. Real estate has historically been an excellent hedge against inflation. According to a Bloomberg study, housing prices tripled between 1992 and 2020. If you can't afford to buy a house or an apartment building outright, REITs, or real estate investment trusts are like the ETFs of the real estate world. You can invest in companies like Ventas Inc., which focuses on healthcare real estate, and reap the benefits of real estate ownership without dealing with tenants or toilets. So, there you have it. 6 powerful assets that can help you break free from the shackles of inflation. These assets are not just financial tools. They are pathways to a more secure and prosperous future. By understanding and leveraging them, you can navigate the complexities of the financial world with greater confidence and ease, and build a more secure financial future. Remember, folks, while cash in the bank might feel safe and comfortable, it's not always the best strategy in the long run. Inflation can erode the value of your savings over time, making it essential to look for other avenues to grow your wealth. It's often a depreciating asset in a world where inflation is a constant threat. By diversifying your wealth into these alternative assets, precious metals, industrial commodities, safe haven currencies, you can protect your financial health. Each of these assets has unique characteristics that can help hedge against inflation and market volatility. Government securities, value stocks, and real estate. You can create a more balanced and resilient portfolio. Government securities offer stability and are backed by the full faith and credit of the issuing country. Value stocks, on the other hand, provide opportunities for growth and income, especially in times of economic recovery. You're essentially building a financial fortress. Real estate, whether residential or commercial, can offer both income and appreciation potential. Every investment comes with its own set of risks and potential rewards, and understanding these is key to making informed decisions. That's why it's crucial to do your own research, understand your risk tolerance, and stay informed about market trends. Knowledge is power, and staying educated about your investments can help you make better choices and avoid common pitfalls. Maybe even chat with a financial advisor before making any major investment decisions. Financial advisors can provide valuable insights and help tailor a strategy that fits your unique needs and goals. By spreading your risk and thinking long-term, you can weather financial storms and take advantage of growth opportunities. You'll be better positioned to preserve and grow your wealth, ensuring that your financial future is secure. Diversification is not just about spreading your investments. It's about creating a strategy that aligns with your life goals and financial aspirations. This way, you can potentially create a legacy that can last for generations, providing stability and prosperity for your loved ones. A well-diversified portfolio can be a cornerstone of financial security, offering peace of mind and the potential for long-term growth.